Assalamu alaikum. This is my first video on managerial accounting. In this video, I will explain the distinguishing features of managerial accounting. I will explain the difference between managerial and financial accounting. This will be followed by explaining the three classes of manufacturing cost, that is direct material, direct labor, and manufacturing overhead. Next, I will explain the concept of product and period cost. And finally, I will explain the trends in managerial accounting. But before I start this session, I would like to thank Nabia Khan for helping me out in preparing these awesome slides. Business success depends upon four things: knowledge and commitment to make product or service, ability to sell the product, entrepreneurial success, and firm grip on numbers. In this video, we will explore how accounting information helps the company to survive and grow. In order to know whether the company is making profit or not, the manager needs accurate information about the cost of the product. The manager has also to decide the number of units to be produced, as economic conditions and consumer taste they keep changing. He has to decide about the alternative course of action to ensure that they survive in the business, like should the company accept a special order from a customer who is offering a lower price than the current price? Should the company make or outsource a specific component? Should they continue with their current range of products or discontinue a particular product line? Finally, the most challenging decision is at what price to sell the product. So, managerial accounting helps to substitute guesswork with informed decision. It helps to quantify the information to make such decisions. Let us talk about managerial accounting and how it is different from financial accounting. We will first of all talk about the similarities. Managerial accounting and financial accounting deals with economic events of the business. That means they both deal in numbers. The only difference is that managerial accounting focuses on cost per unit, while financial accounting focuses on aggregate cost of goods manufactured or sold. Let us talk about how the two are different. The primary users of financial accounting information are the external users like investors, government, competitors, while managers are the primary users of the managerial accounting information. Financial accounting reports are called the financial reports, while managerial accounting reports are called internal reports. Financial accounting reports are prepared annually and in some cases quarterly, while managerial accounting reports are prepared very frequently. It may be half yearly, monthly, weekly, and sometimes daily. Financial accounting report is a condensed report providing aggregate revenues and cost, while managerial accounting report pertains to subunits. Financial accounting reports must be audited by an independent auditor, while the managerial accounting report need not be audited by an independent auditor. Let us start with the managerial cost concept. In order to plan, direct, and control effectively, the manager needs reliable and accurate information. And cost is the critical component in making any decision. In the next slide, I will explain the different categories of cost. Manufacturing includes activities and processes that convert raw materials into finished goods. Manufacturing costs are classified as direct material, direct labor, and manufacturing overhead. Merchandising sells merchandise in the form in which they are purchased. Let us talk about direct material first. Material used in the manufacturing process is classified in two broad categories: direct material and indirect material. Direct material are the raw materials that can be directly and physically associated with the finished goods, like wood in making the furniture or steel used in making cars. It is difficult to associate indirect material with the finished product, and it must have at least one of the two characteristics. First, they do not physically become part of the finished product, like polishing compounds used in furniture, or their physical association is too small to trace it in the finished product, like cotter pins or lock washers. Indirect material is accounted as part of the manufacturing overhead. Let us talk about the second manufacturing cost, that is direct labor. Labor used in the manufacturing process can also be classified into two broad categories: direct labor and indirect labor. Factory employees whose work can be directly associated with converting raw material into finished goods are classified as direct labor, like painters or engineers in an automobile factory. In case of indirect labor, the work of such employees cannot be directly associated with the finished goods, like wages of factory supervisor or factory maintenance engineer. Indirect labor is also accounted as part of the manufacturing overhead. Let us now talk about the last manufacturing cost, that is manufacturing overhead. Manufacturing overhead costs are indirectly associated with the manufacturing of the finished product. It includes indirect material, indirect labor, and any other indirect expenses like factory building depreciation or depreciation on factory machines or maintenance expenses of factory. One study has shown that approximately direct material cost 15%, 55%. Direct labor cost 15% and manufacturing overhead cost 30%. The direct labor cost is the smallest, and this cost is dropping because of automation. Companies are working hard to increase productivity by decreasing labor. Allocating direct material and direct labor cost is easy as it is easy to calculate the cost of the two components. But allocating overhead cost to specific products is a challenge for the managers. For example, how much of the maintenance engineer's salary be allocated to the number of different products produced in the factory? Let us talk about product and period cost. Costs that form part of the finished product, like direct material, direct labor, and manufacturing overhead, are classified as product cost. They are recorded as assets and are called inventory when incurred, and they will be recorded as expense called cost of goods sold when the company sell the finished goods. As the name suggests, period costs are matched with the revenue of a specific time and are not included in cost of goods sold. They are the non-manufacturing cost like selling and administrative expenses. In order to determine the net income, period cost will be deducted from revenues in the period they are incurred. I strongly believe that we learn more by doing an example rather than hearing about the concept. So let's do an example on the managerial cost concepts I have talked about so far. After graduating, Abdullah received a call from ABC company to appear for a written test as the company has an opportunity for a fresh graduate accountant. He was asked to classify the following cost as direct material, direct labor, or overhead. Now, the costs are tires, salaries of employees who put tires on the wheels, factory building depreciation, lubricants, spokes, salary of factory manager, handlebars, and salaries of factory maintenance employees. Now, the cost like tires, spokes, handlebars will be classified as direct material. Salary of employees who put tires on the wheels will be classified as direct labor, while factory building depreciation, lubricants, salary of factory manager, salaries of factory maintenance employees will be classified as overhead. Finally, let us talk about the trends in managerial accounting. Business operates in a very dynamic environment. Government regulations keep changing, global competition keeps intensifying, and there is a constant change in technology. Managerial accounting is able to incorporate these changes and provide accurate information to the managers so that they can make effective decisions by innovating new business concepts. One such concept is of value chain. Value chain refers to all business processes that are associated with providing a product or service. It describes a full range of activities needed to make a product or service. This helps to increase production efficiently, that is, maximizing production with the minimum possible cost. For a manufacturing firm, value chain may include research and product design, acquisition of raw material, production, sales, marketing, delivery, customer relations, etc. For example, lean manufacturing concept pioneered by Toyota reviews all business processes to increase productivity and eliminate waste. while improving the quality continuously. Just in time inventory method is another business innovation of managerial accounting. Let me talk a bit about it. This business innovation is the outcome of the focus on value chain. Just in time inventory methods has helped in significantly lowering the inventory levels and cost. In this inventory management method, inventory on hand is kept as little as possible. This helps in reducing the cost of stockpiling the goods. We simply reorder products to replace those that are sold off. Since the just in time companies do not have excess inventory on hand, they ensure to minimize or rather have a zero defect in production process. This has helped in reducing the cost of wastage. This has helped in coming up with another concept of total quality management to minimize the cost of producing defective products. Yet another innovation is the theory of constraints. It is a method of identifying the most important limiting factor, a constraint, also referred as bottleneck, that stands in the way of achieving a goal. It then systematically improves the constraint until it is no longer the limiting factor. For example, improving overtime payment to labor without affecting the production. Technology has helped a lot in implementing value creating activity and lean manufacturing. For example, ERP, Enterprise Resource Planning Systems, has helped in centralizing all business processes like purchasing, manufacturing, sales, even human resource. Technology has helped in reducing dependence on manual labor and labor cost by adopting robotic equipments and automated manufacturing process. Automation has increased the overhead cost, so allocating this cost to specific product has become more challenging. Managerial accounting came up with a new approach called activity based costing. This costing method identifies overhead cost and then assigns the cost of each activity to all products and services according to the actual consumption by each. This has helped in assigning more indirect cost, overhead as we say, into direct cost compared to conventional costing. Balance scorecard, that is using business practice innovations to enthusiastically may be detrimental to the business. For example, if the manager focuses too much on total quality management, then it may adversely affect the cost benefit consideration. Similarly, reducing inventory level by just in time inventory method may adversely affect the company sales due to shortage. A balanced scorecard helps the manager to keep track of the execution of activities and monitor the consequences arising from these actions by evaluating the cause effect relationship, keeping in mind the overall objectives of the company. For example, to increase return on assets, the company could increase sales. To increase sales, the company could try to increase customer satisfaction. To increase customer satisfaction, the company could try to reduce product defect. And finally, to reduce product defect, the company could increase employee training. The balance scorecard focuses focuses too much on profitability measures. That's why many companies have started evaluating the corporate social responsibility. Corporate social responsibility helps to apply sustainable business practices regarding employees, community, and the environment. So, this completes my explanation on an introduction to managerial accounting. Remember, persistent questioning and healthy inquisitiveness are the first requisite for learning of any kind. If you have any question about the topic discussed in this video, then please don't hesitate to email me or put your question in the comment box, and inshallah I will reply you back. Happy learning.